What's up, everybody? Joe Brown here at the Heresy Financial Show. Today we are talking about why there is never enough money during times of inflation, during high inflation, even during hyperinflation, even though people have literal wheelbarrows full of cash and they're taking it to the store to buy something. Even in situations like that where money becomes more and more abundant, there's never enough money, and why that dynamic happens, what is really going on behind the scenes. Ready? Let's dive in. This video is sponsored by Blue Lagoon Resources, an opportunity to invest in a company with very exciting drilling results recently, but more on that later. All right, so there is this dynamic that you'll notice during times of inflation, how there is never enough money. We've already experienced some of this over the last year. If you look at inflation from January of 2021 through 2022, the rate of inflation was, let's say, almost 8%. Wages increased by 7%. So people got a 1% pay cut in real terms. From February 2021 to February 2022, inflation was 8%. Wages increased by like 6.5%. So wages actually decreased on real terms by 2.5%. Now, what we'll notice here is when we look at periods of hyperinflation, like in Venezuela, like in Zimbabwe, like in Weimar Germany, what we'll notice is that every single time there's always this dynamic where there's never enough money. So why is that? The first reason has to do with the Cantillon effect. So whoever gets the new money first gets to spend it at the old prices. As that money works its way throughout the system, it bids prices up, and the recipients, which is most people, like the average citizen, the recipients of that money last, get the short end of the stick because they got all the extra money, but prices have been much higher for a while now since then, so it's never enough to catch up. Now, the example of monopoly helps a lot here. If you are the banker in Monopoly, and let's say for fun you decide to double everybody's money. You go from, everybody has $100, now everybody has $200. At first, everybody feels richer. Everybody goes around the board, buys more houses, buys more hotels. Everybody's then worse off because life gets a lot more expensive, but nobody has the cash then at the end of that, after it's worked its way throughout the system, to be able to afford that extra lifestyle. So it's much harder long term to survive and to thrive in a situation like that. But that's not how money works its way throughout a system when there is inflation, when there's high inflation or hyperinflation. It doesn't get distributed equally. It doesn't get to everybody at the same time. Instead, that money starts somewhere and works its way throughout the system before it gets to everybody. Now, we saw this with things like the stimulus checks over the last 2 years, right? A little bit of money got handed out to everybody at the same time, or roughly the same time, but the majority of that money did not. The majority of that money went to organizations, went to governments, local, city, state, and federal, and then went to corporations that had the government contracts and things like that. So a little bit of money worked its way throughout the system immediately, was, everybody got some, but the most of that money started at the top and trickled down throughout the system. So whoever gets that money first, it's like playing Monopoly and the banker decides to just double their own money instead of doubling everybody's money. That player is going to be able to afford to buy every single property. Somebody is, running out of cash. They'll be able to buy every single property off them. They'll buy houses. They'll buy hotels. They'll be able to survive a lot longer around the board, run out of cash a lot less quickly. So as that money that they're spending then works its way throughout the board, somebody else sells a property, somebody else gets some of the money. As that money works its way throughout the system, then the prices will have already gone up. So yes, a recipient by selling a property might get more money than they would have absent that initial cash injection, but by the time they get to that player's properties, there's houses and hotels on it. Life is going to cost that player a lot more. And so we see this dynamic at play. It's not that everybody's money increased at the same time and at the same rate. It's that money got given to somebody first and then works its way throughout the system. And that typically results in asset prices being bid up first and then the prices of goods and services being bid up after that. This results in a dynamic where by the time the people who really need the money get the new money, they already need a lot more. It's never enough to catch up. And that's why people in real terms right now over the last year have been getting pay cuts in real terms. If you've got a 10% raise, officially, you actually only got a 1% raise, and it's very possible, depending on where you live and what your expenses are, you still got to pay cut. That's, as long as we're understanding that the official rate of inflation is probably at least understated by a little bit. So we have this dynamic where the poor start to get even worse off, and the rich who get the money first, the well-connected, the elites, get better and better off because they get that money first. And so then you enter into this dynamic where they have to do more and more. So we can look at some of these countries like Zimbabwe and Venezuela and Argentina and Weimar Germany, where they take the new money, they have to give stimulus checks more. They have to give subsidies for bread. They have to do all of these programs to try and inject new money into the system. But essentially what that does, even if there's no corruption, even if there's no well-connected people getting the majority of the money first, even if all that money is distributed equally to the people who need it most, what does that do long term? It might help for a week, might help for a month, might help for a couple of months, but eventually all that new money works its way throughout the system, bids up prices, and everybody is now worse off than they were before. So why is this happening? What is the fundamental reason? What is going on economically behind the scenes that causes this dynamic to be at play where no matter how much money you print and hand out, people never have enough money? And the reason is because of leverage and deleveraging. When you leverage up, what is inevitable is a deleveraging. Because leverage, all it is borrowing purchasing power from the future. There's no way around that. It doesn't matter how many times you divide the units of currency. If you take a measuring stick, to use a Peter Schiff analogy, and it is 12 feet long, you're measuring a house, and then you take each foot and you just declare that a foot is 6 inches now instead of 12 inches, now your house is 24 feet tall. Did that change the house? No, this house size is the same thing. So it doesn't matter how many times you divide the unit of measurement. It doesn't matter how many times you dilute what you are measuring it with. And money is the measuring stick for wealth. Money is not wealth. Money is how you measure wealth. And so if you double the money supply, you change nothing about the real situation, the real wealth, the real purchasing power. All you do is change how it's measured, and you distort people's opinions about what it is because it's, most people don't understand it. So they think reality is one way when it's actually another. Take the pizza analogy. If you have a whole pizza with 8 slices, you've got one pizza. If you slice it up again to give it 16 slices, you still have one pizza. Now you just need 2 slices to equal the same amount of pizza as before you only needed 1 slice. And so if you have an inflationary monetary policy and fiscal policy where you are increasing the money supply in order to finance things and give money out to people so that they can afford it, it does nothing to the real wealth. It does nothing to the real purchasing power. All it does is it distorts people's opinions about what is reality, and it increases inequality because you're never able to get it out without corruption, everybody at once. And if you were, it would have zero effect. It would be like a stock split. If you've ever gone through a stock split, 2 for 1, the price gets cut in half, your shares double in number of shares. You have a 0 difference in wealth because you had 100 shares before at $10. Now you have 200 shares at $5. It equals the same amount. There is no change. So if they were able to distribute all of the new cash completely equally, it wouldn't have any effect. Their whole reason for doing it is to get it to some of the people first to direct purchasing power away from one group to another group where they think it will be beneficial, and it never is. So back to the thing about leverage. If you lever up, that's taking purchasing power from the future. There's no way around that. It doesn't matter how many times you slice the pizza. You've still taken purchasing power from the future. Does not matter how many dollars you print. That's still the reality. So as you move forward and you distort people's opinions about what is economic reality, they borrow from the future purchasing power more and more and more and more, and it is destructive to wealth. So as you move forward into that with inflationary monetary policy, you end up in a situation where all the wealth is gone. It's destroyed. The purchasing power has been spent. spent. It doesn't matter how many dollars you print, that purchasing power has already been spent. So there's never going to be enough money, regardless of how much money you print, because the purchasing power has already been spent. Does not matter how much you print. You can't print new wealth. All you're doing is changing how you measure the real wealth. And now we are going to move to the computer. We're going to take a look at today's sponsor, Blue Lagoon Resources, an investment opportunity in a company that has had some very exciting drilling results recently. All right, guys, we are taking a look at Blue Lagoon Resources, and this is, like I said, an investment opportunity for a company that has some very exciting results recently, and some big investors are looking at this company, some people who know a lot about the space. Like I said, not advice, not financial advice, not an investment recommendation, and I do not own this stock personally. If you take a look, BLAGF is the OTC symbol for this company. It's trading around 50 cents per share. Market cap is just under $46 million. So absolutely tiny valuation here. So one thing to note here, they have three major properties. Four properties. The first one that we're going to focus the most on here is, which is why this company is potentially exciting here, is because of their Dome Mountain mine. That's a big one. But they also own three other properties, and they fully own them. The Big Onion Copper Project. They own the Pelair Gold Property. And then they also own the Golden Wonder Project. And so they do have a couple other properties, but the reason why this company is exciting right now is because of the Dome Mountain mine. So we're going to take a look at this. Basically, with this Dome Mountain mine, they're almost production ready here. They are actually the only company that is planned, the only gold company that is planned to begin production in the second half of 2022. So right now, at least during the second half of this year, no other gold companies are planning to go into production at that time. Here's the map of where the Dome Mountain mine is located in British Columbia here. We're going to look at, where is it? Management. We're going to look at the management here. CEO Raina Vig. He's the CEO and the director here. Obviously, he's got a lot of experience, over 30 years. And he just recently bought another 80,000 shares of this company. And so he likes what he sees. And there are some other big people who like what they see in this company as well. One person that we're going to focus on is Dr. Hennig. And then the other big names that we're going to look at, one of them is Crescat Capital, which if you follow gold or gold mining, if you're on YouTube at all, I mean, you probably are since you're watching this video. Crescat Capital is a big name in, they know what they're doing when they're looking for gold mining companies here. So this company here, like I said, it's got it's about a $45 million market cap. Their main project is this Dome Mountain mine here. The reason why this mine is exciting is, number one, because over the last 12 years, there's been about $68 million spent on getting this mine to the point where it's at right now. There was, over the last 12 years, the company has spent about $28 million. And then before this company, Blue Lagoon, owned this mine, there were other companies, Timmins and Noranda, that spent about $40 million on this, and Blue Lagoon didn't have to pay that to acquire this mine. Blue Lagoon paid about 27 million Canadian dollars to acquire the mine. So they bought the mine at a smaller price than what was spent on developing it. And their current market cap is, like I said, about $46 million. And so it's currently priced at under what it cost just to get the mine to the point where it's at today. Now, the other thing that is exciting about this is, like I mentioned, Dr. Quinton Hennig. He was the founder of Novo Resources. Novo Resources was a company that went up 800%. He was a part of the discovery team of Kirkland Lake Gold, and he was also part of Newfound Gold, which has gone up 1,000% since it IPO'd last year or the year before. And now he's joined Blue Lagoon. He's not on the management team here. So when you go to their corporate page and you look at their management team, you're not going to find him here. But he did join the company as an independent third-party strategic advisor, and he's a major shareholder through Crescat Capital. The other thing about Dr. Hennig is that he's a geologist with about 25 years of exploration experience, and that's mainly gold related. He did work for Homestake Mining Company, Newcrest, Newmont. He's been involved with a number of Canadian listed gold companies, including the Spring Pole Alkaline Gold project near Red Lake, Ontario, which was a 5 million ounce gold deposit. He helped found an Australian exploration company, and they're up about 1,000% since he did that in 2010. So Dr. Quinton Hennig is a technical advisor to Crescat Capital, and he said that this project, Blue Lagoon's Dome Mountain project, it has characteristics of a certain type of system called a carbonate base metal gold deposit. He's got experience with these types of deposits in various places around the world, including Kilian in Indonesia, Baritica in Colombia, and Highland Valley in Papua New Guinea. And Crescat Capital, that's a big name as well. They are investing in this company. They invested $1.5 million, or which is over 27% of the $5.5 million financing that Blue Lagoon just announced they are raising. So they're getting money in the door in order to get production up and going. And so not only did Crescat Capital invest that, but they also secured participation rights so that they have an option to participate in future financing. And so Crescat Capital, they know what they're looking for. They like what they say here. They're investing in this. And Dr. Quinton Hennig is also investing through Crescat Capital here. So they're excited about the drill program that the Dome Mountain results are showing right now. One thing about what they are doing with their drilling here that's kind of exciting is that over 90% of the property has never been drilled. And so just because they're doing some drilling and showing some good results, they've got a lot of drilling left to go. They're sitting on this property, and most of it they don't have. Over 90% of it has not yet been drilled, and they just began their largest drilling program in the life of the company. And the reason why that's important, that Dome Mountain has about 90% left undrilled, is because already with this small drilling that they have done, it already hosts quite a few high-grade gold veins. So as they get started with this aggressive drill program, it could result in Dome Mountain being recognized as a very large, high-grade gold system. The other thing that's exciting about this company is that they've got no debt. This is a big deal right now in this environment, inflationary environment, where lenders are going to be increasing interest rates. You don't want a lot of debt in a situation like this, especially when you're going into production. You want to be able to finance out of cash flow. It's a very strong and solid position to be in if you are able to finance things without cash. And so they've got lots of money in the bank, millions of dollars in the bank, in order to continue financing their drilling. Now, let's go back to the management team here. A couple other things about CEO Raina Vig. Not only does he have over 30 years of experience here, he also he took public a company called Curaleaf, and Curaleaf he raised over $500 million for, and then as of right now, Curaleaf is worth over $12 billion. And so I keep on going back to how small this company is. $46 million is their market cap. And so that starts to attract attention when you get some of these bigger players, some of the big gold companies that like to acquire companies and like to buy projects that are up and running, proven drill results that are producing. You start to attract attention, and so some of these companies that are very small, they have the potential to go big. And so he's had experience with Curaleaf taking a company from very small to very large. And it wasn't just that one. He also was with a company called Harvest, and they were just acquired by a company called TruLive for $2 billion. And so The exciting part of the story here is they're sitting on something that is potentially a very large deposit with high quality deposits in there in the ground, and they're being invested in by funds and people with long track records like Dr. Quinton Hennig, Crescat Capital, and they've got a management team that knows what it's doing in terms of taking a small company and getting it valued at much higher, selling it. And that's the opportunity here to get, a valuation on this. If somebody else comes in and steps in and says, hey, we want to buy you out, that this, they get bought out at a much higher price, especially as these drill results start coming in. Now, they are raising money right now, so that is definitely something to take into consideration. But the people that they're raising money from, like Crescat Capital, to me, that looks like a good sign here. So Blue Lagoon Resources, this main project here, Dome Mountain, looks like it could be an exciting play, especially as we move into this time where big money starts rotating into miners, and where you could have an opportunity for a big buyout here. Again, like I said, I don't own the company. This is not investment advice. It is not, financial advice for a trade or investment recommendation. Do your own research. And this could be one of those. The stock company or stock symbol is BLAGF. That's their OTC symbol for the United States. So as always, thank you guys so much for watching. You guys have a great day.